Right now, more than 1 million robots are working inside Amazon warehouses, each one generating data. Every pick, every route, every avoided collision feeds a single AI that learns in real time. And that data advantage is worth more than the robots themselves. Most people think that the robotics story is only about replacing labor. Well, it's not. It's about compounding intelligence. Every new robot is sending data back to the network, making the next generation smarter and cheaper to train. And then scale becomes a moat. And once you own the data flywheel, well, then nobody else can really catch up. And this is the shift that many investors are missing, because the real question isn't who builds the robots, it's who's going to capture the value once the robots are everywhere. Because last year, China installed 295,000 new industrial robots. And the US, well, we only have 34,000. China already won on volume. They're flooding factory floors with low-cost arms, pouring subsidies into manufacturing automation faster than any economy in history. But here's what that misses. Volume is not the same as value. The race now isn't just about catching up on robot count. It's about owning the part of the stack where the margin lives. Intelligence, orchestration, the software layer that makes 1 million robots worth more than the sum of all their parts. And this is the area where the US still leads. And that's why I'll be covering the robotics stack and some of the top stocks in each layer in today's video. Industrial robots have been around since the 1960s. For decades, they were predictable. One arm, one task, same motion for years. The real breakthrough wasn't better metal. It was intelligence, when you pair AI with computer vision. Once robots could see, they escaped the cage. They moved off factory floors and into spaces that change every second. Warehouses, hospitals, ports, restaurants, even defense systems. When Amazon runs 1 million robots, they aren't thinking independently. They're nodes in a cloud-controlled network that routes, learns, and adapts in real time. The power doesn't simply sit with whoever builds the robot. It sits with whoever orchestrates them best. Last year, about 542,000 new industrial robots were installed worldwide. That's a pretty big number. But here's the thing. That isn't even the real story. The real story is that Amazon alone now has over 1 million active robots in operation. And none of those robots are even counted in traditional industrial robotics data. None of them. So all the current estimates of a 17% annual growth for 10 years is only really part of the picture. And those estimates don't even recognize areas like self-driving cars, eVTOLs, drones, or robots like Tesla's Optimus, and certainly not Amazon's warehouse bots. And Amazon isn't alone. Walmart just committed to over $5 billion to deploy Symbotic's AI-powered robotics across hundreds of distribution centers and their stores. And this happens to be the logistics automation wave, and it's moving faster than manufacturing ever did. And once again, here's what most people are missing about the AI robotics shift. The breakthrough isn't really that the robots got smarter, it's that the economics completely flipped. It used to take teams of engineers to program every single movement. And if you change the task, then you gotta start all over. And what if you have 10,000 robots? Then you have 10,000 identical code sets. Now you just train one model in the cloud, and then you push it to every single robot instantly. Every single machine becomes yet another sensor in the entire network, and they're all feeding data right back, and that makes the model even stronger. And that means the marginal cost of intelligence is approaching zero. And that's the compounding loop. Every new robot is collecting in data. And every data set makes the model smarter. And the smarter the model, the more capable every robot becomes. The overall value is concentrating at two different ends. You've got the top, where the intelligence lives, and then of course you have the bottom, where the robots are deployed so well that they redefine operations. And of course everything in the middle is getting squeezed. I've mapped out most every single major player across this sector, but today we're going to try to keep this simple. We're going to walk through the structure, how the stack actually works, and then I'll spotlight one company from each of these layers so that you can see where the real leverage sits. And going forward in the next few weeks, I'll dig deeper into the undervalued and the high potential names inside each of these layers, the ones that most investors are still overlooking. Right now, let's focus on the framework itself. To me, there are really just 4 tiers in the robotics stack. That means that there's 4 layers that connect the physical world to the digital one. Tier 1, the muscles, the builders of motion. robot arms, actuators, and mechanical systems that do all the physical work. Then tier 2, the eyes and the nerves. This happens to be the sensory layer. So you've got cameras, LiDAR, and machine vision systems that help robots see. And the third tier is the brain. It happens to be the compute layer. You've got GPUs, cloud platforms, and simulation engines that train and coordinate robotic intelligence. And the last tier is the operators. This happens to be the deployers. Companies that integrate robotics so effectively that it becomes their competitive moat. That's the full stack, from the metal to the models, from movement to intelligence. And over the next few minutes, you're going to see how the value flows through each of these layers and where the biggest opportunities still hide. Our first company in Tier 1 is Boston Scientific, known for building robotic systems that bring industrial precision into medicine. Their flagship FARAPulse platform is a robotic ablation system that treats cardiac arrhythmias by steering flexible catheters through the heart's chambers. These catheters are robotic instruments that are miniature, bending, rotating, and applying pulses of energy with millimeter-level accuracy. It's the same mechanics as a robot arm, scaled down to operate inside the human body. Boston Scientific's edge is full-stack integration. They design the hardware, control software, and navigation system as one seamless unit. The sheath and catheter act as the arm and wrist, while the company's FARAWave and FARAView Nav platforms provide motion control and real-time visualization, a closed-loop architecture straight out of industrial automation, now applied to living tissue. This is what makes Boston Scientific a pure Tier 1. They build physical systems that move and act. Robots performing the mechanical side of medicine. Their technology converts digital commands into physical precision, replacing open chest surgery with guided robotic movement. Analysts see roughly 28% upside ahead for BSX as hospitals accelerate adoption of next-gen robotic systems like FARAPulse. The value in Tier 1 is steady. When manufacturing and logistics begin to scale, these companies get paid. But this isn't where the explosive growth is going to live. This is infrastructure. It's essential, but it's slow moving. And now that brings us today's sponsor that I have mentioned in the past, ALZN Neuro, which is a biopharmaceutical company that's developing treatments for Alzheimer's and psychiatric disorders, which affect over 43 million Americans. Their lead product, ALZN, is potentially a safer, more effective co-crystal lithium form, requiring up to 50% less intake for the same benefit. In a recent unrelated study from Harvard Medical School published in major media outlets this past August, found that replenishing the brain's natural stores of lithium can protect against and even reverse AD. And this is exactly why ALZN was founded in 2016. The company is partnered with Massachusetts General Hospital and Harvard Medical School for their ongoing clinical trial with 4 open indications with the FDA: Alzheimer's disease, bipolar disorder, major depressive disorder, and PTSD. Top-line data for their first cohort of patients is expected within a few months. Given the well-documented and individually approved compounds of AL001, ALZN could gain faster approval through an expedited FDA pathway, positioning it as a potential replacement and/or complement to antidepressants in addition to safer substitute for the currently marked lithium. On top of all that, ALZN is developing ALZN002, an Alzheimer's vaccine designed to strengthen the immune system to clear harmful proteins for a safer, long-lasting treatment. They aim to resume their Phase 1 and 2A trial in 2026. To learn more about ALZN Neuro, please check out the link down in the description. And now we'll move on to a company from Tier 2, which happens to be Teledyne Technologies, the company giving robots their vision. Teledyne builds the imaging sensors, cameras, and the optics that power industrial automation, defense systems, and autonomous vehicles. Their technology captures the world in wavelengths that the human eyes can't even see, from infrared to X-ray, turning raw protons into structured data that robots use to interpret their surroundings. The core of that capability comes from Teledyne FLIR, a global leader in thermal and multispectral imaging. These aren't just cameras for inspection. They're perception systems that let robots operate in the dark, through smoke, fog, or even underwater. Whether it's a drone surveying a pipeline, a warehouse robot navigating around people, or an autonomous vehicle mapping terrain, Teledyne sensors make vision possible when visibility fails. What separates Teledyne is depth. They don't just build the lens, they own the entire vision stack. From CMOS sensors and thermal cores to signal processing and embedded software, Teledyne controls every layer that converts the physical world into machine-readable vision. That vertical integration translates into reliability. and reliability is the currency of automation. Analysts see roughly 21% upside ahead for TDY, driven by continued demand in industrial inspection, defense, and advanced automation, sectors where failure isn't even an option, and precision always pays. Tier 2 is where acceleration is happening right now. AI is transforming perception itself, making cameras not just recorders, but decision makers. A robot that can see can finally adapt. And that's the breakthrough that moves robotics from repetition to autonomy. Now I'll cover a tier 3 company by the name of nvidia, which everyone should be aware of because they happen to be the brain behind modern robotics. And of course, if you're getting the sense that nvidia is a major player in every new technology, then you're not wrong. NVIDIA powers intelligence layers behind nearly every major robot deployment. Their new Jetson AGX Thor platform acts as a full robot brain, capable of running advanced AI models directly on the machine. It gives robots the ability to see, plan, and react in real time, pushing NVIDIA well beyond pure compute and into the perception layer itself. And then there's Isaac Sim, built on NVIDIA's Omniverse platform, the digital twin environment where robots can learn before they're even built. Here, developers can simulate entire factories, sensors, and workflows with physics-grade accuracy. A robot can be trained overnight across 10,000 virtual scenarios and deployed in the real world already optimized for performance. And that's the breakthrough. Intelligence trained entirely in simulation, then executed seamlessly in reality. With every product release, NVIDIA moves further on down the stack. They don't just power the AI that thinks, they simulate the worlds robots move through, and increasingly, they build the hardware that makes it possible. NVIDIA now touches every layer of robotics, the brain, the eyes, and even the motion planning that drives the muscles. They're not just powering intelligence anymore, they're industrializing it. Analysts see roughly 25% upside ahead for NVIDIA, driven by continued leadership in AI infrastructure and robotic simulation, the twin engines of machine intelligence. Now I'll move to a tier 4 company by the name of Amazon, the operator that turned robotics into a logistics advantage. As I mentioned earlier, Amazon runs over 1 million robots across its fulfillment and sorting network. From shelf-moving fleets like Hercules and Pegasus to Proteus, the autonomous mobile robot that navigates freely among human workers. This isn't a lab demo. This is nationwide. It's a cloud-orchestrated system that moves inventory, routes packages, and it rebalances throughput every hour. Now, item handling is the hardest problem in automation, and Amazon keeps pushing the frontier. Sparrow picks individual items using vision and suction. Robin and Cardinal handle sorting and depalletizing. Sequoia reconfigures storage layouts for faster cycle times, and Blue Jay coordinates multiple arms to perform tasks in parallel, reducing reach, lift, and walk time. Each and every upgrade compounds upon itself, so more SKUs that are handled autonomously results in fewer touches per order. Amazon is also testing frontier form factors where it matters most. Proteus works safely around associates, while Digit from Agility Robotics is being piloted for tote recycling and handoffs that fixed systems simply can't handle. So if we zoom out, the moat becomes obvious. System-level orchestration. Amazon doesn't buy robots, it integrates them. Dozens of robot types, inventory pods, AMRs, and articulated arms, all coordinated by a single cloud platform that optimizes flow in real time. That orchestration drives multi-billion-dollar efficiency gains as these next-gen sites begin to scale. So you can have faster cycle times, higher throughput, and fewer touches per order. Bottom line, Amazon is the template for Tier 4, but of course they cross over multiple tiers. Now, they don't just sell robots, they compound them, turning a global network into one automated machine. That kind of operating edge is almost impossible to copy. Analysts see around a 20% upside for Amazon this year, tied to a lot of this automation that's going to expand its margin. So here's the investment insight. Most investors try to pick the robot company, but that's tier 1, the muscle. It's steady, it's essential, but it's not really where the big upside lives. The real leverage sits higher up the stack, like tier 2, where perception is scaling fast. Then, of course, you have tier 3, where AI infrastructure captures the richest margins. And then, of course, at tier 4, That's where automation excellence turns efficiency into its own moat. And right now you can see on the screen each tier and the potential 10-year growth outlook. Then we have margin expansion through efficiency. We have Tier 1, which grows slowly and steady. Tier 2 compounds as AI improves perception, and Tier 3 captures the highest margin expansion. And then, of course, Tier 4 shows up as operational leverage. Now, if I were building a long-term robotics allocation today, looking out 10 years, this is roughly how I would frame it. I'd put 10% into Tier 1, 20% in Tier 2, 60% into Tier 3, and 10% into Tier 4. But of course, you have to keep in mind that many of these companies are in several of these stacks, so you kind of need to take that into consideration. So overall, that's the stack. You've got 4 layers, each compounding in a completely different way. So the question isn't which robot to buy, it's which layer do you want to own as the world begins to automate. Now, if you're a person who would rather have diversified exposure, there happens to be 5 different ETFs that I'm going to research a little bit further and showcase in a future video. Now, in no way are any of these recommendations. They're just vehicles that I'm going to be analyzing and figure out which one will be best performers over time. And like I said, I'm going to share that in another video in a couple weeks. So here's what this video boils down to. China wins on volume. 295,000 industrial robots installed just last year versus our 34,000. But once again, volume is a commodity. Intelligence, now that's the real gold. The US owns the brain layer, the AI, the cloud orchestration, the simulation platforms that make every robot smarter. And that's the lesson. You don't need to build the most robots. You need to capture the value once robots are everywhere. And that's the stack. 4 tiers, 1 compounding system. Once again, coming in a few weeks, I'll be breaking down the best names in each layer, the ones that most investors might still be missing. And I do have a link to the full spreadsheet that I'm researching down below. And if you see any companies that are missing, just send me a note and I'll add it to the sheet. As always, thank you so much for watching, and we'll see you next time.